What's up, investors? Welcome to episode 2 of the MegaCharts Stock Analysis channel. Today, we're going to be using MegaCharts software to analyze the financial performance of Chevron in under 5 minutes. But before we get into the numbers, let's give a little background on the company. Chevron is an American-based multinational conglomerate. Their biggest revenue comes from oil, both upstream, meaning they actually drill for the oil, and downstream, meaning they refine the oil into sellable products and then sell these products to consumers, for example, at their gas stations. Chevron is a massive company with, as of today, $277 billion in market cap and around $245 billion in annual revenues. Chevron's largest shareholder is the Oracle of Omaha himself, Warren Buffett, which might make you think, if Warren Buffett thinks it's a good stock, I should probably invest in it too. But let's take a look at the data first. We're going to try and analyze this stock in under 5 minutes using MegaCharts software. Okay, so first, let's look at revenue on a quarterly basis since 2012. In 2022 and 2023, it's up over the earlier years, but it's very similar to 2012 and 2013. If we zoom out even further, you'll see that revenue is actually down from 2008. So the number one thing to note, this is not a growth company, at least from a revenue perspective. Now let's look at revenue growth. We'll switch from annual to quarterly to get the most recent data. And again, we see that revenue is already on the downswing this year. Going down to free cash flow and operating expenses, we see that free cash flow is way up in 2022. But again, if we switch to the quarterly view, we see that in recent quarters in 2023, free cash flow is back down to where it was in the 20 teens. Now I'm going to skip all the way to the bottom and take a look at revenue per employee. This in and of itself is impressive, and it looks like they must have decreased employee headcount without taking a hit on revenue. So from a productivity standpoint, they are doing better. I don't know why it's not translating into higher free cash flow. If I had to guess, it's likely that they're making more technology advancements that are equally expensive, at least for the time being. Finally, I'm going to take a look at revenue to market cap ratio. So revenue to market cap ratio is actually up from historical lows, especially if you zoom out and look back to 2008, where you'll remember Chevron had a really high revenue, but evidently this doesn't translate into higher stock price. Now I'm getting curious, so I'm going to go back to the revenue and operating income graph because I want to look at operating income for that 2008 era. And looking at this in 2008, operating income quarterly is at around $12 billion, which is basically what it is in 2022. So the stock price has gone up substantially, but the fundamentals haven't really improved. I'm sure Warren Buffett has his reasons for investing in this stock, but as for me, I don't see it as a strong stock. Again, this is 100% not investment advice. You have to do your own research and use your own judgment. I'm just making a judgment call based on what the data is showing me. If you want to do your own research, just like I did, visit MegaCharts.com and make a profile. You can get started today researching thousands of stocks. And thanks for watching.